Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, and we are now aligned with UTC through the beauty of daylight savings. So it is just gone a couple of minutes past midday UTC as well. A really big shout out to everybody joining in live today, and a really big thank you to everybody returning. Had a short break with the family, had some important birthdays and celebrations and bits and pieces like that, so rare to take some time off, but I felt like it was a good time in the market to do it. You know, could have been completely wrong, but at the same time you do always need to kind of take that breather. So a really big shout out to everybody rejoining again today. Craigie boy straight in the chat, got a nice brew here with your name on it, mate. So anyway, today there's a couple of little bits and pieces that I wanted to cover off with you all right? And that is that we're running the recovery program at the moment at TBN, at the Birb Nest. So if you want to know anything more about that, you can find links down in the description. You can look at the Twitter or the X profiles that have gone out today. You can also follow me, as you can see at the banner at the top, at BC_Richfield on Twitter, and make sure you don't miss out on any of those. So I've got the chart up at the moment. I've removed all the levels, everything. I thought it's a really good opportunity today to just strip away all the noise and start everything from scratch. Angela Burwood, hello and welcome. And our wonderful Jojo. How are you doing, Jojo? Has daylight savings been kind to you, Jojo, or is it just made things worse? I hope not. But yeah, as you can see here as well as our wonderful tech team in the background have popped up on there for me. You can see that there. Obviously, you're already following the Birb Nest as well, but if you're not, you need to be. That's at the BIRBNEST. Right, so as we're running the recovery program at the moment, the idea is that we've just opened the premium Discord for everybody to join. You can still take advantage of that. We're running webinars every day. Everybody has access to the trading team's calls, the charting, just, you know, the courses, everything that we offer, just in a little hope that it gets everybody a little bit back online as we're moving in to what could be a very resurgent end of the year and into 2026. Now, difficult to say that while everybody's feeling really kind of down on their luck at the moment, but ultimately, you know, the way that I'm looking at these markets is that there's a lot of positivity on the horizon still, on, you know, more of a macroeconomic kind of viewpoint. If we look at the debt buyback in the US next year, if we look at the fiscal stimulus that's going into Europe and has already started in Germany, could even get a big injection if the tariffs are overruled in the Supreme Court. I think it's 200 or 400 billion, I believe. Could be wrong on that. It's going to get re-injected back into US companies. Basically, you're looking at coming out of quantitative tightening at the moment, or QT, and into QE type environments, right? So ultimately, that looks quite good at the moment. The economy is stable in the US. Hopefully, for a number of reasons, we see de-escalations in geopolitical tensions as well. So, you know, the market's very, very good at pricing these things in. And ultimately, we ran so very hot in equities. You know, you look at the S&P 500, you look at the AI situation as well. And it's not a surprise, you know, just to give you a really quick summary before we dive in, because we are going to cover this. I'm going to get into the charts. We are going to look at a few of the alts as well. I also want to cover a little bit of what we're looking at today in terms of the recovery program, which is how to fix your overtrading. So this is something we've had some of the biggest questions on, people saying kind of, you know what, I had this awesome run. We had the bull market conditions. I was in, maybe I was a bit overexposed. I either got, you know, really badly hurt, as a lot of people did in, you know, that mass liquidation cascade that, you know, ultimately, traders like myself will go on consistently, and in my belief, any decent trader worth their salt will go on consistently about risk management. And unfortunately, this was a situation where you could have, had your risk really dialed in as well and still got hurt. But ultimately, it's that phoenix rising from the ashes story at the moment. A lot of people hurting, a lot of people down, and a lot of people face up to that trauma, if you like, financial trauma, by trying to get the money back from the market, revenge trading, over trading. So I just want to share a few tips that I've learned over the years, and what I've learned from some of the best traders, the best trading houses, the best funds that I've ever had the pleasure of working for or alongside or know people within, things that I've experienced myself, the amazing time coming up to almost 4 years now that I've spent here at the Birb Nest as well. So we are going to take a little look at that. And for Craigie Boy here as well, can we look at last week's mother bar pattern? It's so large. How would you break it down? Sure, man. Absolutely remind me on that as well. I'm going to make a little note here. We'll take some time to look at that, because again, this is a really, really good thing that ties into, fixing our over trading as well, and just looking at it as a kind of broader context of when we should be most active in the markets. I think of a few really, really top people that I've had the blessings to kind of either work alongside or know in my years in the industry here. One of the most prominent being Trader SC, who would always say, and still does, when your edge is in and it's hot, that's when you put your foot on the gas. Right? That's when you go full size. That's when you go in. What it doesn't mean is you don't over leverage. You don't overexpose yourself. When you say go full size, for me, that's normally 1 to 2% at the high end. Of my available capital, right? And never looking to risk more than that. I always want to stay in the game. One of the other most important things is just to make sure that you are remaining in the game as well, all right? So let's just take a little quick look through this, shall we? Because I want to kind of discuss this point before we do get into the charts here. We're going to start with a nice clean chart today, all right? So I just wanted to share a few points on how to fix over trading, because like I said, we've got a lot of questions about this. It's a really, really core feature that we see. And the first one is really understanding what environment you're in. And I'm going to try and go through these as we also look at the chart, and we're going to kind of level these up. So ultimately, we want to understand, are we trending? Yeah. Are we consolidating? And within that, we want to break that narrative down, and we want to understand the context of that within different levels. Like, for example, if we look at the weekly chart here, well, what we can see is that we had this large expansion here. We've come out of this consolidation. Yeah, the market considering Bitcoin value down here in this range. Then price breaks out, and then it moves, to an area of prior fair value or a previous consolidation, using the principles that the market is either in a state of consolidation or expansion. Also, known as imbalance when we would be looking at a range. And out of balance when we're not, okay? Now, what we notice is a lot of these areas kind of align with one another. If I'm looking at this area here and I'm really trying to focus on consolidations that lead to these large moves, then if I'm looking at the consolidation here, and even if we take this, roughly, and just focusing on the bodies here as well, as price consolidating in here, as we get back to this move, look how price kind of moves through this area, an area that was really heavily controlled by the sellers. All right. So the argument is that if either a huge entity or a number of entities, whoever it was, ultimately, I really try and reframe this. I watched this incredible webinar, or a few incredible webinars in the last year, where I've been kind of really diving very, very deep into volume spread analysis again. And Carmine Rosato, just this unbelievable kind of pillar of that world, really phrases it incredibly well, because I've always said, and I believe this is a very easy way to conceptualize it, the strength of the buyers and the sellers. But, it's right when you say for every buyer, there's a seller. So it's not really that. It's more of a case of when the sellers stop selling, the buyers stop buying, right? So, for example, price coming around in this range, high to low, high to low, high to low. We have that breakdown. Price consolidates again, spends a little while in here. Then we have the breakout. Now, price really kind of moves through this area. So sellers were in control of this area previously. We would look for those kind of initial rejections. There can be orders left there from higher time frame changes, etc. Don't be shy. Shay, is that you, brother? Good to have you with us. And we see this initial rejection, maybe picking up some of the orders that were there previously, or other people taking profit that were long from down here. But then these really strong moves through, give you that understanding that price has now really moved above this area that we should see as this bastion of resistance. And now what it's doing is, as it returns here, it gives these people chance to either get out of that position, to flip long, to cover, hedge, etc. Anyway, the point here is that what we look at on a weekly chart will be different to a daily to a 4 hour, to a 1 hour, to a 15-minute, etc. So what do we want to do? Well, we want to just put a really clean set of rules around what we have. Okay, so I'm just going to move us down. Well, actually, let me finish this point here to a weekly chart. So what am I thinking at the moment, and why haven't I been bearish, right? So really interesting one here. And I think we had this on the show a couple of weeks ago, and people said, okay, you were bearish here, right? But you're not bearish here, which seems pretty mad considering the price is still moving down. Now, for me, it's not mad at all. It makes perfect sense. When we saw the wick rejection up here, yeah, then there was always a risk that we were going to get this. This was a huge flush, right? You know, we saw this very news driven as well. So it's very difficult to kind of get into this. And especially once we came down, we took these key levels out, we came into the prior consolidation over here. It was a tricky move to play this off the high. Some people did it exceptionally well. We did catch a few shorts with members. People like, I remember speaking with Trader XO, for example, who, you know, unbelievable, probably one of the best shorters in the market. Great at longs as well, but I understand where he's coming from. As traders, sometimes you see certain things a certain way, and seeing exhaustion in a market has always kind of seemed clearer to me than seeing these key real areas of like accumulation and then, you know, getting in on those pumps. But anyway, so I was bearish up here, but I explained really clearly that, you know, unless we lose this consolidation here, then, you know, price can easily retest the hundreds, but I think we're going to see a lot of buying there. This was the last consolidation before price pumped, retested it here, pumped again, came back in here, saw this huge absorption from this move. And ultimately, we've just been kind of holding this area. Now, these are weekly candles, so obviously price is, you know, continuing to work its way down. So all we're doing, or all I'm doing on a weekly scale, is I'm just looking where the key liquidity is resting. The reason that we were cautious here, unless we got that strong move and really started to kind of hold this area, the reason that I wasn't looking to be short in these areas either, because, you know, this ultimately is where we're expecting the buyers to step in. And so far they have. Yes, we look at the lower time frames, it's been a little bit more of a bloodbath, but we're going to break that down. So if we line these up and we look when price was breaking down here, we had the liquidity resting here, resting below those equal lows there, liquidity resting here that we still haven't tapped, as well as obviously these lows as we came in. Horace, hello, mate. Hey, we finally got 100K. Little inside joke there for anybody that's maybe not a regular on the stream. Horace has been a firm advocate of getting that 100K bidding for a while. So yeah, good vibes, man, really good vibes. I think a lot of people, you know, look, a lot of people get hurt in these markets every day, right? The key is just to not overexpose yourself to them, which sounds really simple, and it's hard to, you know, park that euphoria when every tweet you see is someone, you know, apparently, you know, having enough money to buy a Ferrari or in private suites and jets and stuff like that. But, you know, just remember, a lot of this stuff, like most things in the world, is posturing. Ultimately, your job as a trader is to stay in the game. And as long as you stay in the game, you'll always get opportunities. And then coming back to our point, fixing overtrading, understanding what environment we're in, that's what then gives you that opportunity to strike when you have that confirmation. So as we see here, this is the consolidation, price moving down into this area. No interest in shorting here, right? Interest in picking up some longs from the lows, yeah? Then what I'm looking for is price to move back into a key area of resistance. So what I'm looking for here are these areas of demand and supply that mean the most, right? So this whole area here is really key for me. But what I'm really focused in on are the kind of lows of this area. And I really like this consolidation of this move down. We saw it support price higher here. We saw the highs from the wicks and the body find support through here. So really what we've got, because they're all adjoined candles here, so we have this one really large area here. You can see them as blue on my chart normally, right? So I'm not saying, oh God, you know, I'm not willing to short into this or that. What I am saying is I'm looking at these liquidity targets and saying that if I do get shorts from these areas, I want to be short from higher up, chasing down the lows if we get the breakdowns, which we'll cover on the lower time frames, or I want to be long from these lows when we take liquidity and move higher. I'm just going to draw this one in as well, because that's obviously key, as is the prior weekly low. All right. So then if I'm looking at this and saying, okay, well, what's kind of capping the market to the upside at the moment? And we've got two areas. We've got this here, which was the last down close candle here, yeah, before price moved higher. So looking for this once closed above to be held by the buyers. If this is where buyers took control of the market, chances are those buyers or that massive buyer, yeah, however you want to conceive it, because it could obviously be either, are going to want to defend that position if they're in there with large size and conviction. The other thing is as well, if price moves away from this area quite quickly, there's probably still some orders resting in here. Price came down. Yes, it had this huge flush out, but it just showed the eagerness of this area here, as well as the lower liquidity levels that we swept, to keep the market higher, meaning that we can see that buyers stepped in here and we saw this large absorption. So I'm just going to draw this in as well to our equal lows. So we can now understand how we're targeting liquidity, right? Using a weekly chart, for example. And again, depends what kind of time frame trader you are. If you're somebody that likes to execute on like a 4 hour, you probably want to be looking at monthly and quarterly charts and stuff like that. For me, I'm a slightly lower time frame trader, so I don't, I'll obviously do all the analysis through all the different levels, because we need to understand in terms of where we are in a swing environment, where we are from the macro standpoint, but also then breaking that down from more of a liquidity perspective intraday. So if I'm looking at this now, I'm saying, okay, longs from the lows down here makes sense to me. Some key liquidity, and we get the patterns that we're looking for. All right. So with that in mind, it also means that shorts from this area down here are very much on the table as well. So I'm just going to draw this in as a black line and say, okay, any point that we engage with the black line up here is a point that we want to be looking to potentially short the market. All right. In fact, I'll do it as I would do it normally. So this is our OBW, right? There we go. I'm going to lock that. So we see here, this is the move. This is the consolidation that led to price moving high. This is where buyers aggressively defended this position. And when price started to break down, we closed below this here. A return to this area then allows those buyers or that massive buyer there to say, okay, market's against me here. I'm not able to keep the market propped up. I'm going to close this position out here for minimal or maybe no loss, and then also possibly look to move the other way, or in fact look to hedge this move higher with a move to the downside. So any moves up to here we can look to short, any moves down here we can look to long. Now all we want to do is we want to move on to lower time frames, yeah, and then take a look at that. Yeah, sure, if we get time, Horace, by all means, we will take a little look at NQ and ES, main instruments that I trade actually. So we do garner a lot of information from that. So now we're down here, we can see really clearly that we've got a plan, right? The plan that's decanted from the weekly is, look, if we get the opportunity to long these lows, yeah, like we had the opportunity with this one here, or if we're driving back above the black line here, then we can look for price to start to break down. Now, the other thing that we can see quite clearly on here, or I hope people can see on here, is after this large drop and we start to consolidate in this area, this is the kind of place that you can use, say like a volume profile is a really, really good way. I'm just going to draw it through to here, for example, to get an understanding here, all right, of the volume range. So just down here, you can see the value area low, value area high. We can see price rejecting, closing below, selling off, closing back inside, small deviation here once it's back in the range, heading for the range highs, rejecting at the range highs here, breaking down. Now, ultimately, we saw the deviation and price step back inside the range here. Let me move this across a little bit. All right, as it moved lower. Then what we see here, if we extend this line out, was the clear break below this. Yeah, the move back to retest it, and then price selling off. Well, why is this important? Because if we look at the first point on our checklist here, and I'm just going to put these into a little note up here that we can take a look at. Okay, let's move this up here. So just some notes for this one, right? In terms of how to fix overtrading, understanding the environment we're in. This is why we're looking at the key levels. Where's the liquidity resting? What are we targeting? Are we trending? Are we consolidating? All right. And, all of those factors play in, because on a weekly scale, like we said, if we're looking at a move like this and we're looking here for a breakdown, and we see price break down, for example, even if we were showing the patience to trade this on a daily scale, what did we say, right? We're not interested in longing until we reach any kind of liquidity at the lows, meaning that as we start to see breakdowns of key levels here, then we can start to trade them. And if we showed a lot of patience, one of my personal favorite setups here is looking for these breakers, all right? Again, utilizing the consolidation here before price moved higher, taking liquidity here and rejecting. Now, if this is where the buyers are defending, price moves away from here, we want to see this area hold. And ultimately, if we're coming in, we're kind of spending a bit of time here. We see the accumulation. If this fails to pop, which it did, and then it comes back down, I'm looking for it to close below the bodies here, then this for me is a key sign that we can look to start chasing down these lows. All right. And in the same vein, if we were looking for the opposite here, then this is the area. I'd be looking for the down close candles here to be closed above. So we see that change in dynamic as we've got here. See price close above it here, meaning that there's an understanding that we could be seeing this bullish start to the week. Now, there's a lot of different things that we need to overlay from this, but we're really just putting very simple principles aligned here, right? Consolidation, expansion. Are we trending? Are we consolidating, right? Is price in balance? Is it out of balance? Are we seeing breakouts? Are we seeing fake outs, for example, right? So that's just one way that you can look at that, and you can take that onto a daily chart here from a weekly and really start to plan out. One of the key things that you'll notice is that while this all looks very quick to move around this chart whilst we have the data, this is each candle's a day. So imagine the patience you needed. You see this consolidation making, you think, you know what, not being long from here, like we said, waiting to try and take longs from lower down. Any move higher here could very well be a move to take liquidity before price breaks down. Or if we did look to take the long from here, we're doing it with a structure. For example, like with me, if I'm looking for a key area of demand, then I'm saying, okay, close above here, I like this. So when we revisit this, I'll look within this area to get long. If I can't find the long setups, or maybe I take a long setup and I get stopped out, well, why are these buyers no longer protecting this area? Then when we break down below it, it gives me the opportunity then to step in and search for trades lower down. So either way, I'm learning from the market. Why? Because I understand the environment that I'm in, all right? And the next one I've got on here, what time frames are suitable for this? All right. Now, this is completely up to you, but this does once again come back to that, key thing that we discussed with so many members, so many mentoring clients, which is, what type of trader are you? And although I'm chuckling a little bit at the thought of people I know that would just say, I'm an awesome trader, or, I'm just, I'm a crypto trader, or whatever. That's not, unfortunately, the answer. The answer should be based around what's your edge? How do you get your edge in the market? What time frame do you use to ascertain that edge? I work with some of the best swing traders around, in my opinion, people like Just Pitt, who's just an exceptional swing trader, somebody like the Trading Tank as well. I know people like Trader SC, Trader Dank X. Some of these guys are some of the best exponents of that, all the way up to, traditional market people as well. Obviously some of the absolute greats, but the time to stop and say to themselves, okay, what can I trade? Right? Okay, so BC, I really love your shows. I've been on the live trading shows and I want to be an intraday scalper. Okay, great. So what do you do for work? What's your family life like? How many hours can you bring to the charts every day, etc.? I work a really demanding job. I get up at 6 in the morning. I'm lucky if I get in at 6 at night. I've got a beautiful young family at home, so I dedicate as much of my time to them as I can. Okay, that's great, no problem. So, you're probably not going to be able to sit at a chart, 5, 8, 10 hours a day. You're probably not going to be able to do a couple of hours research, at least in the morning. There's all these factors that kind of go into it. Now, I'm not saying that swing traders, position traders don't work just as hard. They do. But if I look at, if I look at our fundamental lead, for example, KZM, right? He's, just always in the trenches, constantly researching, looking at things. So, on that side of things, if you're laying in bed at night and, you have got a young family at home, you have got a demanding job, and you do find yourself these little spare hours here and there, while maybe, maybe the missus or your significant other is watching something on TV or catching up on something, or they're out having a social, you grab yourself a few hours every week. That's when you want to put that time in, and you want to have an understanding of that. So in terms of your time frames, if you're looking to do intraday trading, for example, then you need to understand that takes a lot of time and focus that you're going to need to bring in, most of the time aligned with high volatility sessions, like obviously the main one being New York, as well as London, Asia as well. And if not, then you really need to kind of gear yourself around to this idea that, okay, look, I'm not just going to be punting on shit coins one day and then trying to scout the NASDAQ or trying to scout BTC the next day. That's going to bring a lot of inconsistency to me. And while a lot of people had some good gains and a lot of those gains given back, yes, Jack, yes, there's our as our dear Polish friends say, it is what it is. But with that, I'm speaking to a lot of people who are like, yeah, like I'm just getting absolutely chopped up trying to scout these markets in the moment, or I can't swing trade in this. I'm trying to do things on the lower time frame, and I'm just getting hit really hard. I keep saying to them, why are you doing that? What experience have you got in doing that? And they're like, well, I made some good, money early on trading some altcoins. I've held a bit of BTC and stuff like that. You're talking about completely different disciplines, right? So when we overlay timeframes, make sure that you show that full discipline, right? Make sure that you show that and you bring that to the market like you would with any job or any other part of your life. Don't just see someone that says, I've got 100% scalping win rate strategy using 7 moving averages and, whatever, Greek mythology. And then you dive into that and then you get obsessed with that. And then that doesn't work out. And then the next minute it's like, I've got this thing where you can use crypto screeners and find blah, blah, blah. Just understand who you are. When you understand that, the difficult thing about all of this is then showing the patience to wait until conditions suit you and you strike when the iron's hot. So while the examples I'm giving you today are examples based on my own experience, but also examples that are based on, how I trade every day. It's been 7 years for me now as a full-time trader, where that's my only source of income is from the markets. And I appreciate that that's still very, very young. And we're always students of these markets. But, I have seen so many people wreck themselves in that period doing things that are very, very avoidable. So this isn't the kind of thing that a lot of people want to see on YouTube and Twitter. They want to see, your guaranteed strategy to buying your next Lamborghini or whatever, or your first Lamborghini. And unfortunately, I don't want to be the one to make you suffer this realization, but they're just not out there, right? It's just graft and hard work, understanding yourselves, understanding your environment. So in terms of timeframes, what I would recommend to most people is that, aligning yourself with institutions, all right, with whales, with major players in these markets who are very unlikely to be sat down on a low time frame scalping these charts. They're much more position-based traders. And as we zoom out, we do remove a lot of that anxiety. Now, it doesn't mean that that's in any way easy, right? But if we all of a sudden start to understand, okay, are we trending? Are we consolidating? What are we looking for? Really good example in here is price has a small consolidation here, then a really large breakdown. We can then see with the power of hindsight as we step in here, it was end of October, beginning of November, a couple of weeks ago, price had started to consolidate in this range here. So even if you did something as binary as just covering the bodies of these, you can see from the lows back inside the range, moves up around about the midline, back down, up to the range highs, deviation back in the range, back to around the mid, back to the lows to the mid, breaks down out of it. And now we're retesting this area. So if we understand range trading concepts, then basically what we're looking for here is when price deviates, meaning it's moved outside of the range, and we see this area then act as resistance, then this is something we can expect price to be kind of breaking down out of this area, all right? Price steps back in this range. Well, this is where it was considered value. We know buyers stepped in here and we know sellers stepped in here. So people probably going to kind of bid this up and then, look to cover or take some profit or maybe even get out altogether when we get back to the highs. So immediately you're stepping in with a plan now. You're like, right, okay, I've shown some patience. I've seen the breakdown here. I didn't chase this short because look what happened to people that did. It all dried up under this low here. We see the absorption coming in. A lot of effort from the sellers, late sellers stepping into this market who are now getting hurt as the market moves the other way. If you allow yourself to be a reactionary trader, what's going to happen is you're going to short moves too late and then you're going to get hurt in there. Then you're going to long moves that you probably shouldn't really be longing at that stage, again, stepping in late to the market. When actually, the kind of term of being late to these markets is a little bit of a subjective one because, up here, people kind of trying to short this early on the lower time frames were probably hurt a little bit as we saw this secondary move higher to purge the liquidity out, right? Whereas people then that were patient, waited for price to confirm, close back into here, and then started targeting down to the lows were probably rewarded a lot more. So it really does go to show that it's not about, you don't have to catch bottoms, you don't have to short the tops, you just need to have that idea on structure, all right? So as this brings me on to the next point here, we are going to look at it, I'm going to run you through my whole system, how I'm looking at these charts, we're going to review some assets together as well. And I love that, Horace, I'm a full-time trader now. I buy high, I buy high and I sell low. Well, hey, well, at least it's a strategy to start, and at least you've got it written down, mate. So that's more than some, right? And I know you're joking, so I know you catch some good trades, but do appreciate the banter. So as we are here, let's get rid of this, and we're going to move in. We're going to cover a lot more of this in detail as I run through the charts. So in terms of timeframes, I would always recommend to everyone to use either a double or a triple screen type system. You don't want to overwhelm yourself with information, but you need to understand what timeframes, interact with each other the best. I personally, as an intraday trader, I focus very heavily on utilizing the 4 hour, the 15 minute, and then the 1 to 3 minute to execute. If I'm looking to move that to a higher time frame, right, then for example, I would then use a daily, an hourly, and then say like a 5 minute, etc., etc. Just looking at how these different timeframes kind of interact with one another. It's all about finding what kind of makes sense to you and how you read the market. But the key thing is consistency here. The next point, which is super, super important, is just to size down. Only go full size. So for me, that's a maximum of 2%, all right, of my available capital in my futures, right, my derivatives account. When your edge is red hot, and this kind of brings me to another point, really, which is kind of asking what your edge is. Do you know what your edge is? Are you kind of just buying into hype? Are you just hoping there's a bull market on and then thinking, do you know what? Memes have been doing great. I'll probably just try to long some of them. Are you working in a cohort? Are you drawing information from other places? Are you validating the information that you've got? Do you have a really good kind of understanding of a number of the things that you're looking to invest in? Are you trying to scalp trade? Do you understand the liquidity in that market that's available? Do you understand the key narratives and drivers within the market? Just to give you an example, have you got an understanding at the moment of the potential relief, coming from, the alleged end of the government shutdown being in place? That's going to almost certainly be positive for equities and for crypto, all right? Looking at the demand side of risk assets, all right? Moderated concerns about the tech AI valuations and earning growth. So you're watching earnings that are coming out at the moment. You're watching how that affects the S&P 500, the NASDAQ as well, for example, those key AI drivers that have been the underpinning factor and strength behind those indexes and their moves. How crypto benefits from the risk on move, all right, but still remains, especially at the moment, very liquidity and flow driven, all right? So how do you measure that? Do you understand good people that do it? Is it something you learn yourself? Do you rely on that information from other people? How do you then decant that into your own systems? And if any of these big narratives reverse, the shutdown drags on longer, earnings start to disappoint, we see a macro shock and that hits the market, risk assets can sell off really, really quickly. So, understanding and framing what your day-to-day is so very important. And within that, you remove a lot of that anxiety, when you're taking longs from the lows because you've got a really good setup and it hits your strategy and it hits all your criteria and that long gets stopped out, you'll sleep a lot better, believe me, than thinking, I don't know why I longed down there. I don't know why I longed up here. The market was just super bullish and that, that's how it was going. And then it's very, very difficult to repeat that. All right. And that kind of covers the last point here, is what correlations do we have and what do we need to see? So with that in mind, let's move on to a clean chart with, say, Ethereum. Yeah. And actually, before we do that, because it was asked in the questions as well, and I do want to cover this, let's just take a look at what we've got going on here at the moment today with traditional markets. Now, the equity markets haven't opened yet. We've still got about another hour until we get some... we've got about another hour from now. So obviously NASDAQ and that, which opens earlier, that's moving up 1.41% today. Again, what's good for the goose is typically good for the gander. If risk markets, very technology heavy indexes like the NASDAQ, like ES, which is shown here by the ES contract, which is the S&P 500, Dow Jones is shown by the YM contract, then this typically is good for risk assets. So we're happy with that. What have I got down here? Risk on currency pairs, Aussie versus JPY, New Zealand versus JPY, high yield versus low yield currency pairs, looking for either that carry trade, but also looking at those kind of riskier currencies. When we see them doing well, typically it means that risk on bid is available. Bond yields are up today as well. And obviously we're waiting for the equity market open to see how the Magnificent Seven and some of the other key equities are performing as well. Then I'm looking at things like the dollar index. Typically, I want to see the dollar index and I want to see the volatility index, the VIX, lower. What I like here, we can see on the DXY, which is basically the dollar just measured against a basket of other currencies that's slightly heavier weighted towards the euro. We can see we stepped back in the range here. What do we do? Deviation, step back in, expansion, took the midline here, now back to the highs. What we really want to see here is this being a deviation of the highs and the dollar looking to sell off a little bit. Now, understanding correlations is a lot about understanding how they slip in and out of, basically how relative they are, and certainly how reliable they are. The dollar's been a tricky one because of the key economic drivers behind it, but always makes sense to watch this. But for me, something I'm always massively focused in on is the VIX, the volatility index, all right? Think of this as like the fear index for the S&P 500, all right? How many puts are being taken out? Or basically think of it as the increased short exposure, all right, in the options market here. And this is a key level, 20. We want to see price down below 20. If we're down below 20, it doesn't mean that risk can't sell off, as we can see here. If we just add the NASDAQ, and if we add Bitcoin as well, Bitcoin being in green, NASDAQ being in blue, we can see here, right? Look, when the VIX started to sell off here, we did get that relief, all right, on Bitcoin and obviously in equities. Then again, as we saw it start to rally back up, look at what that did here to Bitcoin, all right, the pressure that it put here on Bitcoin and even on equity markets. We saw this here as we're measuring with the NASDAQ, all right? But ultimately, as we can see down here with both Bitcoin and the NASDAQ, with price being down below 20 and either relatively flat or downtrending, gives us a really nice environment for risk. So that's one of the first things I'm going to check. That's why I really like this massive long tail pin bar with a short nose, or like a really large bearish hammer candle, showing that, price just, obviously there was a lot of activity there, coming in on Friday, an aggressive move for puts in the market that then just got absolutely smashed back down. We're now back down below 20. So it's looking like the week has the good potential to open up favorably for risk markets, okay? So immediately I'm sitting there and I'm like, okay, we can see the volatility index is down, the VIX. DXY is flat, rejecting a range high. Our risk on currency pairs are up. And as it stands, the indexes, the S&P 500, the NASDAQ, have opened the week in the green. So are we getting a little bit of relief? Well, let's think back now to what we were talking about earlier in terms of looking at, okay, and understanding what environment we're in. Well, technically we're still on a risk-on environment, but it's one that's very, very difficult to trade at the moment. We've seen a lot of headwinds coming in, and question marks are being asked about the AI bubble, a lot of other speculative news or headlines that are coming out that are just shaking the market a little bit. Obviously, we had the situation, the escalation between China and the US, with Trump and Z kind of, having that little tat-to-tat about, tariffs and them getting put up. And then there's a deal on the table all of a sudden. And then, that can always remain a little bit unstable. The government shutdown, that's a big one. Starting to get the news come through that they think that there's a resolution on the horizon. Some forecasters even looking at the latter parts of this week, or I believe actually early next week as well, based around the Senate. In terms of what time frames, well, actually, the trickier the conditions, the more I'm either looking, again, if I don't have a really clean range to trade, or if I'm not a range trader, right, then I'm looking for confirmation. I want that confirmation to really be kind of aligned with where I think the institutions and these major players are coming into the market. And in terms of environment, what am I looking at here? I'm looking at a VIX falling. Great. What do I want to see there? I've got risk on currency pairs up. We got yields on the treasuries coming up. We got the equity market coming up shortly. At the moment, the indexes are positive. So if we start to hold some key levels, more often than not, we see that wash through as positive for cryptocurrency. And I'm focusing mainly on crypto. We are going to take a look at the indexes as well before we close up the show. So all of a sudden, I've answered the question. Now, how kind of certainty and conviction do I have? Well, I'll typically get that from the charts and the environment. But for me at the moment, it's still a very, very tricky environment. So what am I going to do? As we covered earlier, I'm going to size down, right? I'm going to limit my exposure. Ultimately, if I get a banger trade and it does really, really well and, goes beyond expectation or hits expectation, I sit there and I think, oh, man, I only had 25% of my normal position size in this, or 50% or 20% or whatever. I'm not going to let that bother me, because it also means that when I have sized up, I've got a lot more confidence in where the trades are heading, and I have much more opportunity to bring that money in. If I'd gone full and that had gone against me, then I'm taking an unnecessarily big hit. So don't be that person, all right? Remember, your job is to stay alive in these markets. It's littered with corpses of people that over leverage, oversize. And if you see these idiots, and I can think of a few offhand, I'm not going to call out live, but if you hear these people saying like, oh, I'm about to get liquidated, or oh, getting liquidated again, they're just scammers, shillers, people that are making a lot of money off your fees, handouts that you're giving them that have no idea. They're just gamblers. That's if they even are taking these positions. I know some of them are. Don't be influenced by those people. Stay alive, stay in the game, invest in yourself, invest in your education, all right? Right, so before we close the show, I just want to give you 10 minutes running through the charts. As promised, we are going to take a very quick look here at the NASDAQ. You're going to have to forgive me for a moment because I do have a lot of stuff on the chart that I'm just going to have to get rid of. Beautiful. All right. So really, really simply, let's think about what I just discussed with you before. How am I looking at the chart here? I'm saying to myself, okay, if I want the higher time frame view, I'm looking here on the weekly. So this was a liquidity level that we were targeting. So just get that off for later. Yeah. So look, are we trending? Are we consolidating? Well, the weekly, I'm really, pray to whoever and whatever you would pray to, that you understand that this is a trending market. All right. And this will be gappy because we're on the, because of the nature of the contract. But ultimately, this is what's represented. Expansions, consolidations, spot the consolidations with the bearish candles, expansions, holding that prior consolidation, moving higher, holding the prior consolidation, moving higher, consolidation, moving higher. What are we doing? Retesting this consolidation. Where would I look to kind of change that? Well, when we stop respecting that flow, right? If we start coming and closing in below here, I think we've got a lot of resting liquidity down here. And we also have some key levels that we could come back into retest around these highs, okay? So fine. So what do I understand about the weekly? I understand that we're trending. I understand that the narrative is bullish. I understand that we're reacting at a key level where buyers were present and they're probably going to want to protect that position. So as we move to the daily, as we're drawing back down into this area, it gives me two options. If we see the breakdown early, we start to see this dynamic change, so a large move down here below this for the first time, closing down below the up close candles here. Then we know that we're targeting this area. All right, very, very dangerous to short this, especially late in the game. Much better, from my opinion anyway, to target these key areas of consolidation that we have. All right, for price moving up. So what would happen if price closed below this? I would think, well, price could possibly be coming down to take out the liquidity below these. If I get trapped on that short, price steps back in here, then I'm going to look to long it back above here, because ultimately this would have been a stop run or a liquidity hunt, and then price is now generating that liquidity to move higher. The other part of the plan that I can have here as well is looking for this dynamic change here. And say, okay, I want to see price closing back above here. So it's a tricky one here because the weekly we're super bullish. This is just a pretty decent pullback here. And let's be honest, from the highs, what are we looking at? I don't even think it's 7%, is it? No, 6.39. That's a really good, healthy pullback, all right? If we look previously, and you start measuring these, all right? This one here, all of a relatively similar nature, all right? So this really isn't something to be panicking about. The markets are full of uncertainty at the moment, and the markets don't really like that. They have to reprice often. They're incredibly efficient vehicle at doing so and at de-risking. So as soon as we start to have some good news catalysts come through or some clarification, this is when we could really start to see the pops. Right, so the 4 hour is going to be the lowest time frame we're going to go on to here. Now, the lowest time frame we can see, we've started to get that resurgence. Here's the consolidation before price moved to the offside, and now we've reclaimed that. So that's a bullish sign for me. Next target is now looking for this consolidation here before this big drop. So I can look for that to be reclaimed, price to get above, and then to move higher. All the time as I'm looking at this, I'm looking at how it affects crypto, Bitcoin moving alongside it, right? As those correlations start to realign and we see those key drivers come in, that's where our opportunity exists, all right? So really, really simply, this is where we are. We've reclaimed this area here. So for me, the highest probability is that we're starting to make a move up towards this consolidation here. If we break back down and we get get back down below this consolidation, then I'm asking myself that the buyers that have stepped in here that trapped these sellers now no longer have control of the market. The sellers have control of that market, or the buyers just simply aren't buying at these prices, meaning they're looking to buy at lower prices, and that often wants to be backed up with liquidity. So these lows down here, and as we move across, we can see part of this large consolidation that before the breakout was then retested, and this was a really key area that buyers stepped into the market. So let's take a look here. Sorry, Horace, of RTH. Take a look here. I think we were looking at it previously on this contract. So now let's bring a little bit of context here to Ethereum, and then I'll leave you alone for the rest of the day, right? But just to kind of lay the stall out. What we were looking at here previously, and this is the same chart that we've been using, is really, really simple. These are just key levels that have been highlighted in the same way as what we just previously discussed, right? They're areas of the market that I'm looking to get involved. This blue area here, if we kind of screw the chart up, we can see was really, really key resistance all through here. Resistance, resistance, resistance. What happened here? Big move above it after an initial rejection, yeah? Then price came back down into here. Okay, sorry, mate. No, yeah, sometimes, to be honest, just a lot of the teaching, a lot of the sessions we do, I use extended. But yeah, you can do. It's a really good way, especially if you're using volume a lot, that it just kind of consolidates those sessions down. And then on here, we can see as we came back in, we held this level. So as this arrow denotes, price coming back down to this level, this was a really good area to buy. All right. If we'd seen a strong breakdown here, price had retested it, and then we'd lost this level here. Really simply, we were targeting these lows or this area here. We saw this happen here. It wasn't the cleanest, right? Price did break down from here. Then it got back down above. Then when it got back under here, this is when I had conviction that we were going to see lower prices. All right. We got this move higher here. Again, brutal move here. You see it really often, but you have to stay with the conviction. This was the move higher, obviously trapping a lot of buyers up here. Then we saw the breakdown of the move here, and we saw the flush. Now, a little bit like we've seen with Bitcoin, we're kind of holding these lows, yeah, through here, and price is starting to move up. Now, I don't really have much conviction in this here at the moment. I'd actually be looking to drop this down to, say, a 4-hour and say, right, well, what are we looking at here? Now, if I'm looking at this being a range and I'm saying, okay, well, price has had a pretty sharp drop here. So I know this is a key area to target. This is the last place sellers were really aggressively in control of the market here, and obviously here. This is where we saw these really big moves away. But I can see quite a nice range through here. So let me just remove this for a second. Yeah, so if we look at the bottom, price started to consolidate through here. Now I'm only going to take it through to about here, right? Because remember, when you're looking at these things, you need to be really careful, because it's easy to say, oh, how would I have traded this? And you take it all the way to today, and it gives you this range. You're like, whoa, that's perfect. But remember, you didn't have that information. If you were looking to trade this here as a range, this is the information you would have had. And why is that important? Because I would have been looking here for the breakout of this. All right. And again, maybe you're somebody that doesn't use volume profile. So as we can see here, if we extend this across breakout, this area gets retested, great area to look to get long, right? So if price breaks down, I'm looking for this consolidation here, and that will dictate to me how I'm then looking at price. Because if I then extend this range high across here and say, right, just do it in a larger color so it stands out, larger color, so larger size, sorry, so it stands out for you guys. Yeah, so if price breaks down here, then what am I going to look to do? Am I just going to look to blindly short it? No, because price could easily be coming back to retest this again. And if this is the breakout of the range here, and price is now coming back down to retest this area, all these highs, remember, if we just look at this here, what have we got? If we look at the wicks, that's the area that was really getting rejected here. All right, price came up, rejection, rejection. Now we've got a breakout. So price could be coming down to this area here, maybe even back down here to the value area higher. All right. Ultimately, you want to kind of see these volume shells here play a part. And now if I take this left and I say, okay, this was the consolidation here that led to the sell-off. This is what was controlling and trapping price. All of a sudden, we got a lot of confluence that through this area here, we're either going to see some form of range high retest for price to then allow the opportunity for buyers to step back in, or for those same buyers to step back in. And if I get rid of the volume profile here for a second, you say, well, actually, BC, I don't use volume profile. No problem. There's the sell-off. There's your first touch point on the underside of this consolidation. The price has come back in and set this low again here. As soon as I've got this information here, 1, 2, and this third point here, I can get a really pretty solid understanding that, you know, and again, I sometimes like to focus on the bodies here rather than the wicks, because the wicks, you know, show you what price tried to achieve. The bodies tell you what it did achieve. So even if I'm doing something quite rudimentary like this, and I'm saying, okay, well, that's the range, and we know we've got the wicks from up here, and we know we've got this consolidation. Well, if price steps back in here, yeah, remember our old value area high here as well, then price stepping back into this area, I'm just going to treat this like a range through here. All right. Price holding this area here, we start to see some absorption on the lower time frame. We start to see our entry patterns, yeah, patterns like this, where you come into a key area of support. We see a localized sweep of liquidity trapping sellers, and then that fast expansion higher. Yeah, these retests of this area gives us opportunities to get in, or opportunities on this breakout, or the retest, or revisits of inefficiencies, or my personal favorite, which is to trade the breaker. All right. But those kind of setups on the lower time frame around here give me a really good opportunity then to get long. And if I'm wrong, price steps back in the range, then I can short it back down to the range lows. Right? That's why it's so very important that we have that plan and we have that understanding of what the market is showing us and the dynamics that are being played out in front of us. So now going back to Bitcoin. Yeah, and going back to what we have up here, if you are suffering with overtrading, or you really have kind of struggled in the market conditions at the moment, make sure you take time to understand what environment you're in. Also, if you're not really sure of that, come and grab yourself access to the recovery program at the moment. All right, you get access to all the videos, the courses, the webinars, the trading team come in. We've had loads of people coming in asking amazing questions, really kind of helping them understand parts of the market that they felt was knowledge that they had missing before, or other people that are coming in that are really new, that appreciate that, you know, they don't want to take that kind of gambling perspective on the market, and they're willing now to kind of, you know, be humble enough to step back and say, okay, look, you know, I do need a little bit of help here. So when you've got that kind of understanding, you know, understand the environment you're in, understand the time frames that you want to trade. Don't be jumping around here, there, and everywhere looking for setups that look great, because there'll be something on some time frame that will look great. Size down, especially at the moment, until you feel that you've got that real ultimate conviction. Look to build back slowly. Doesn't matter what you've lost, doesn't matter what you've gained. You only stand to lose more if you're not really willing to mitigate that risk. And understand your correlations. Is the market really set up at the moment for the risk bid? All right, you know, is it really set up at the moment for the risk on sentiment, for the recovery that we're seeing? Is the news starting to flow through positive? Is there real kind of solid rhetoric or solid data underpinning it? And what are those key factors that are going to really help us move? All right. So slightly different session today, I know, guys, but, you know, great to be back with you all. Wednesday, we'll have our alt request show. Got a few bits and a few things that the team and I are looking at the moment as well. And sorry, just to focus, just one more thing. Horace had just asked about this, right, which was our inside bar pattern, right? So this here, and you can find this pinned to the top of my Twitter profile. If you look at the top of the screen, you can see that at BC_Ridgefield, trading the inside bar pattern, right? The inside bar pattern is very, very simply, this is the example I believe that Horace is talking about here, which is this. This is our mother bar. Right, an inside bar pattern's 2 candles, a large candle like this, or any size candle. The following candle, high and low, is within its range, meaning it doesn't go higher than it's higher or lower than it's low. That's henceforth is inside, the same way we would trade an inside week or an inside day. Is often a sign of consolidation before price is then looking to make its next move. All right, good example of that is here when we had this mother bar. Right, we either trade it as a range, meaning if we see price reject and step back in the range, we target the lows. If, however, we see a breakout and we've got a very small close above this here, then this area here, we're looking for retests to go long. So if we now look at what we've got at the moment, we can see price has finally run out the low of this mother bar. That's where the liquidity is resting. It's now back within the inside bar. So this just makes up a secondary range within the first. And just look how range trading principles do us well here, right? So look, what price runs this, rejects, comes back in the range, moves down to the range low. We've now run the mother bar low and the inside bar low here on a weekly sell close back above. So looking here on our range principles to get some kind of relief and expansion higher, we can then obviously move down to lower time frames, for example, as we've done here on the 4 hour, overlay the same principles, which is saying, okay, now we're back in this range here. What do we want to see? Well, it's Monday. We've seen the expansion. We don't FOMO into trades. We want to see price come back and retest this area or any of these small consolidations, or as we can see through here, these quite nice support resistance areas, right? And then we can look to be a buyer here. If it shows weakness, it continues to break down, then we reassess. All right. Great to be back with you all, Craigie boy, and everyone as well. Thank you so much for listening to me waffle on. I'm going to have to go now. Got some other commitments to attend to today, as well as all our wonderful members. If you do want to come and join the recovery program, remember it's completely free. There's no nonsense trickery. You just get access to this, the full Discord, the premium Discord with all the calls, the team. You can engage with all the traders, you can get access to all the courses, and what's obviously, an awesome position for you to kind of focus on your education, as well as, looking at the trading calls as well. But I will be back with you all on Wednesday for the live show, and we'll have the recovery program shows going out throughout the week as well. So I hope to see you all over at the Nest. And if I don't get the opportunity then I'll catch you all on the live on Wednesday. Have a fantastic week, everyone, and I'll see you soon.